Backdoor Roth. What is it and how can you take advantage of this thing? In today's video, I'm going to explain to you how I use a backdoor Roth personally and how it's a great strategy, especially for high income earners. Now, I explained in another video that there are two types of IRAs, traditional and Roth IRAs, and I'm going to go into the backdoor Roth IRA and how you can use that and how I use that personally. So if you're a married couple or family filing jointly and you make over a couple $100,000, high earner family, you cannot contribute directly to a Roth IRA. You can contribute to a traditional IRA, but you can't deduct that money off your tax forms. So it's kind of like, what's the point of that? Well, it still grows tax-free, so that's good. So you still get that advantage. But the bigger advantage is if you can put money into the traditional and then get it into a Roth. And the government allows you to do this. So here's what you do. It's 2019. You put $6,000 individually into a traditional IRA account. That is after-tax dollars. You may not deduct them because you earn too much money. Then I take that money, the $6,000, and the next day, I immediately flip it over to a Roth IRA account. So I have both a traditional IRA open at a brokerage account, and I also have a Roth IRA open, both accounts. So I contribute it to the traditional, I'm allowed to do that. Then the next day when the money's in there, I flip it over to the Roth. I transfer it over to the Roth account. And then I just let that money grow for a couple of decades. And at the end, it's going to be worth a lot more, and I don't owe any tax on it. Now, what's the difference between growing in the traditional account or the Roth? In 20 years' time, say I contribute $6,000 today in 2019. In 20 years' time, at a 7% growth, that's going to be worth about just over $23,000. In the Roth, that's all my money. But in the traditional account, if I take that money out, I owe ordinary income taxes. Taxes ordinary income on the different. I already paid on the $6,000, so we'll back that out. I owe income taxes if I'm in a 24% tax bracket at that time, just making that up, and then I would end up with $19,000. So $6,000 today in 2019, I end up with an extra $4,000 in 20 years' time if I can use the backdoor Roth, and that's just individually. If I do it with my wife, we can both contribute $6,000 each. That's $8,000 in savings, and I can do this every single year as long as the government approves this, which currently is a strategy that you can use. That's a backdoor Roth. Contribute to the traditional Roth, flip it over, contribute to a traditional IRA, then immediately transfer that money into a Roth IRA, then invest it in your stocks and bonds or whatever, and just have it grow until you need it. And you can do this every year. Now, the big caveat is you can't just flip the money from a traditional IRA to a Roth IRA without looking at all your other retirement accounts, especially if you have 401k accounts, especially if you have IRA accounts. Then there's lots of different tax implications for just trying to move that money. So you've got to take a look at that with either your your accountant, your CPA, your financial advisor, and definitely take a look at that first. Do a lot of reading online. You can find out lots of great information. But that's how I take advantage of a backdoor Roth each and every year. Again, contribute the money straight into the traditional, then immediately transfer it over to my Roth account, and then let that grow. And the money's in the Roth, and when I get to retirement, I get to take it out tax-free. I hope that makes sense. I know it was pretty quick. There's lots of great information online that you can look up. And of course, reach out to me with any questions that you have. Have an awesome day.